Saunders, the chief hawk, was joined by Dave Ramsden. It was a bit of a surprise, but not that much of a surprise, wanting to cut the asset purchase facility from 875 billion sterling down to 840 sterling. So lots going on. Obviously, the Fed last night continued to sort of build market expectations that the taper will start probably now in November. Powell talked about the taper coming to an end by the middle of next year, so summer 2022. That 120 billion will be withdrawn or potentially withdrawn. No sort of acknowledgement last night about the actual numbers or indeed the actual time frame, but he did talk about perhaps a November start for the taper to start actually in November. So we'd been talking about possibly September, possibly October, and then it was November, December. A lot of market participants were assuming it was going to be as late as December. Some were even talking about it might have even slipped into 2022. Now it looks like it's going to be November. But all of that said, it's still a huge stimulus that's getting chucked at the American economy still. So again, Powell said last night that inflation is more or less on target, on course. The issue remains the job situation. So in about 5 minutes' time, we've got the latest weekly jobs numbers. Remember, those initial claims went to a post-pandemic low a couple of weeks ago at 310,000. That's just 60,000 above the normal economic cycle average of around 250,000. Then we spiked up a bit last week, and we're expected around 325,000 this week. The good news last week was that there seemed to be some dent in the long-term unemployment rate. The long-term claims rate seemed to come down for the first time in a while. So that was last week. Obviously, say lots and lots of news this week. Economic data today has been on the weak side. We've had PMIs starting with Australia overnight, which missed expectations. And then this morning, Europe and the UK both missed expectations. The highlight for me was the German manufacturing and services number, significant miss for Germany this morning. So all week, all around, we've got the US data later on as well. We've got Canadian retail sales with the US weekly claims in 5 minutes as well. So lots going on. Elsewhere, the Swiss National Bank also kept interest rates at their record low levels, negative interest rates. Remember, the Swiss National Bank were the first to start chopping rates a long time ago, now along with the Japanese. No change to rates. Again, talking about not letting the Swiss franc get too strong. Do what they need to do to keep it under control. And then the other big news that's been brewing for about 3 or 4 weeks today is the first day of the bond interest rate repayments from Evergrande, that China's second largest property developer. They said yesterday that they would be able to pay back local bondholders, but not the foreign investors. This morning, there's been a story being broken by the Wall Street Journal, saying that China prepares for Evergrande's demise. So the Chinese government apparently spoke to local councils, local regions within China to prepare for the demise of Evergrande. So not coming in to bail them out, or possibly the local regions may step in for certain property development in certain parts of the area. There was an article in the FT yesterday. Michael, good morning. What time is the announcement? It depends which announcement you're talking about, Michael. There's been lots of announcements so far today. The news is in 5 minutes, the actual economic data we're looking at, and that's the Canadian retail sales figures and the weekly claims, new claims out of the United States. But the major news today was really, lots of central banks on the block today. The Bank of England's probably top of the shop. But what I was saying about Evergrande is basically there was an article in the FT yesterday, Financial Times, saying there's equivalent of 90 million accommodation units in China that are completed, that are unused and unfilled. So lots of chatter initially that this was potentially China's Lehman moment. That's been pushed back by many as well. But certainly this could have some significant contagion. As far as foreign banks are invested into Evergrande, the major exposure sits with UBS, HSBC, and BlackRock, combined 875 million. So not massive amounts, but it's a significant situation, and it could be a sort of tipping point within the growth cycle of China, which is concentrated on property being a key growth focus for them. So anyway, there we go. Lots of other on the side as well. Lots of other central banks out today. As I said earlier, the Central Bank of Norway, the Norges Bank, again as I anticipated, actually rose rates. How do you say that? Get that your teeth in. Rose rates this morning by 25 basis points. Wasn't a surprise, but obviously the oil price helped the Norwegian crown, and that's been moving up quite significantly. And then on the other extreme, we had the central bank in Turkey slashing rates, and the Turkish lira collapsing once again, and dollar lira, even though the dollar is relatively weak against most of its major peers today, at record highs again. So dollar against the Turkish lira trading at 875.50 plus last time I looked. So awesome news. Thank you very much, my friend. Michael, at the Bank of England. The Bank of England have already announced, Michael, they've said there's no rate change. I said that the key that caught my eye from the Bank of England, I've just wrote a little note up on our webpage, so have a look at that on our analysis page, was a split in the vote. This hawkish tilt, which they'd mentioned at the last meeting, is confirmed, basically. So it looks like there may even be rate rises at the end, even the first quarter, second quarter for the Bank of England. We'll see what obviously comes of that. And then another member of the Asset Purchase Facility Committee voting to cut the amount of stimulus into the UK economy from the Bank of England from £875 billion a month to £840. So, lots going on. No news across any of the terminals with regard to the Evergrande situation, but that payment is imminent due. It's certainly due before the US Open this afternoon, so in the next hour or so, apparently. So there we go. Thank you. Okay, it's a busy news day, so you've got to keep on top of it. Especially if you're trading intraday, also be on top of things. So let's just have a look at the charts. Let's just get rid of me for a minute. So what's the outcome of all of this? Well, euro yesterday we moved down on the Fed news overnight. There was a strong dollar reaction. We went to 117.50 beforehand. Now we moved down here under 117. It's not actually got 117 on here, but 117 sits about here. And then we've rallied this morning. Dollar's weakened, not really rallied, but we've weakened back really to where we were before the Fed announced anything yesterday and earlier in the week. So, these high impact, high volatility, volatile events, you're looking at the charts now and it's sort of all over. Yes, you see a big spike in your candles, but as you can see here, we're back to nothing. Michael said he's missed that. It's South Africa's interest. Yes, exactly. It's South Africa's. Did I mention South Africa? I did. It's all these banks today. But yeah, South Africa, 3.5% is the rate, standard rate, by the South African Reserve Board, and that's unlikely to change today. It's Heritage Day today, isn't it? I think in South Africa, Michael. I don't know. Confirm if is it actually Heritage? I'm sure it is. So no change there, but obviously lots to contend with for the central bank in South Africa. Very, very high unemployment rate. Big problem with particularly youth unemployment and jobs in South Africa, and getting the economy running again. Huge potential there, but it's not been galvanised really over the years, and many criticisms flying around now. Yes, so the Central Bank of South Africa still to come as well. You're absolutely right. Yes. So as usual with these sessions, guys, if there's any particular asset you want to have a look at in greater depth, stick it in the box and we'll have a look at it. Let me just see if there's any friends over on Facebook because I can't share their views. There's nobody got anything to say, I don't think. Actually, that's the wrong one. Let's have a look. Hang on a minute. Let's have a look. So euro back to 117.20 at the moment, 117.50 that line at the top of the calendar. There's our key event, and we've got no comments over on Facebook, so we'll shall see. So that one. There we go. So. Oh, it's tomorrow, isn't it, Michael? Okay, all right, tomorrow. So so first up is Israel asking about euro dollar. Well, as you can see here, this is the euro dollar on a 1 hour time frame. We've breached 117 this morning. Here's the big candle from yesterday's Fed event. Weak, I say, very, very weak. In fact, PMIs out of Europe this morning. Euros moved up on that as the dollar's continuing weak today. So 17.20 is our support here, which takes us back to yesterday and Tuesday and even earlier in the week and Monday. And the resistance sits here at 17.45 to the upside. Israel, my friend, on that side. If we just look at the higher time frames as well, the daily time frame, it's still very much pressured the euro against the dollar. We moved down, tested this low here, and this low here from August. We got close to yesterday, and yesterday's decline at 16.75, but we bounced off that today, so up. So the higher time frame, euro dollar, still remains under pressure, and it really needs to breach 118, which is where the 20-day moving average sits. As you can see here, we've been very much sort of a sideways action, although quite a good ranging movement over the summer. So 118 now is the key line in the sand to the upper time frames. Haroon is asking, can you tell me about pound, yen? Good morning, Haroon. On a 1 hour chart, he says. So let's have a look at cable. Cable. They could be on the 1 hour time frame. Where's it gone here? Let's see if I can do it. As Andrew does it here. Let's pull it across. I can't see it. It was it had a good bid this morning. 155.50 pound yen. Let me just find file chart. There we go. Let's put the template on. So here we are, 150.50. In fact, this is this big strong candle from that hawkish move by the Bank of England this morning, or earlier today, not this morning, it was an hour or so ago, wasn't it? Big positive candle here. Oh, back breaching 150. So this has been trending higher from these lows earlier in the week. Let's put that. There we are. Cool. So here we are. These lows we got to on Tuesday and Wednesday down here under 149. We're now over 150, over 150.50, and next obviously line in the sand is 151 itself, which sits just about there here. So that's well within range for the rest of the day. This would take us back to this is Thursday, Wednesday, Tuesday, Monday. It takes us back to Friday last week. If we go to the higher time, we've got the daily time frame. Big move down. Yen, sterling under pressure. Yen got safe haven bid earlier in the week on Monday. So if we're going to take out the big down candle from Monday, when we had this big safe haven bid, we had the Evergrande story breaking. We had stocks crashing, so the yen was very much in bid. That's been turned around here as we've hit the 200-day moving average, bounced off it, held it on. Went under it a wee bit on Wednesday, Tuesday. Rallied through it on Wednesday, and we've had a big, strong day today, thanks to the Bank of continuing hawkish tilt from the Bank of England. But we need to get back over 151 if we're going to go back to the north side. Generally, this pair remains sort of biased to the downside. These lows still continue to get lower here. You can see that. Has the Bank of England done enough to turn this trade around? But on the 1 hour time frame, which is what you're asking about, Huron, its bid is strong. It's broken out. The trend started this morning. It's got bigger. It's gained steam as the yen's weakened, particularly today as well. So we've had this combination of a weaker yen earlier in the day, and then a relatively hawkish Bank of England helps the sterling move. So here we are moving up over 150 and testing 151. So breaking out of that range from yesterday, above Tuesday's highs as well, and wants to get to 151. So there we go. On the 1 hour chart, Uzbek is asking about the Swissy on the 4 hour and the 1 hour. Remember, also Swiss franc, as I said earlier, Swiss National Bank continuing to support or not let the official line not let the Swiss franc get too bid. They're very quick to intervene. The Swiss National Bank of all the national banks, I mean the Spanish and the Japanese are the keenest to jump in. If you look at the daily time on this pair, it's the dollar's been bid against the Swiss for most of September. We topped at 93.35 earlier in the week. Let me just put that top in there for you. There we go, 93.35 earlier in the week, and we're down now to 92.36. So back under 93 itself. So 93 is the round number. This pair needs to get up to the higher side. So on the 4 hour and the 1 hour time frame, so we were bid into mid-September. We've come down this week so far. So that's biased a bit low. So the 4 hour time frame, that would have breached and gone short yesterday or whenever that was. That was 21st, that was the day before yesterday. And moved down. It's found this floor here, this 92.36 area. Gone up and then moved down. So it's still biased to the downside, the 4 hour. If it's going to move further down, Umsbet, we need to break not only the 92.36, but this low here, which sits at 92.22. And then your next low target will be the 200 moving average and the bottom of the Bollinger Band, which sits at 91.95. So breaching 92. So 92.25 is your next target area, and then below 92 at 91.95. And if that gives way, takes you back to 91.75. So those fives coming into play again. So 4 hour, third candle down. Let's just started that one. And as far as the 1 hour, the 1 hour will be a bit more exaggerated to the downside. So you can see these previous 4 hour candles all to the downside. The 1 hour, moving down. Had a bit of support on this area here, this 92.36 we talked about. That's where the 200 hour on the 1 hour time frame support sits. It hung on to that for 1, 2, 3, 4, 5 hours this morning. And it's moving down now. So that's your next target. You can see on the 1 hour time frame, you can see that the Bollinger Bands have squeezed in, so it's got a closer initial target as you might expect on the 1 hour. So you're a 1 hour trade. We've tested it in this hour as well. So 92.28 becomes your first target. Then there's that 4 hour target there at 92.22. And then in an intraday basis, we are going to yesterday. So just put in yesterday's low. Yesterday's low was at 92.15. So 92.15 is your next area to the downside. Umsbet, my friend. Quincy, we just looked at Euro, but we'll have to look at it again. So Euro here on the 1 hour time frame, having a good day. We're up. We're over 117. We spiked lower because of the. I'll actually use that chart there. We spiked lower yesterday, also after the hawkish Bank of Central Bank of America, the FOMC, and the press conference from Jay Powell. They've got, I think, he's got a speech as well later in the week as well. So more clarification from yesterday from him there. So 116.68. Back over 117 this morning. Our resistance ahead of the Bank of England was around 117.20, but Euro's got a further bid through there. The data today has been quite weak, but as obviously the ECB are not saying anything today, but the tilt from the other key central banks has been to the hawkish side. Everything from the Norwegian central bank actually moving rates up. You know, it's actually confirmed it and it's done it now. It was very much expected. So again, Bank of England coming out a bit more hawkish than expected. That split vote was a bit of a surprise, and so therefore, that then sort of adds to the pressure on the ECB potentially as well. So here on the 1 hour time frame, we're up nicely. What you're saying, 4 hours your time frame. So current 4 hour candle is complete in 20 minutes, isn't it? That's a 12-hour candle here. So again, nice. That's that big sell-off we had on Monday. We went down there, and now we've spent 1, 2, 3 candles retracing about 80% of that move. So the fact we've breached this 117.20 level on the 4 hour time, see how that fits there? I'm sure you have, Gen Z. There's that 4 hour support now. Now we've breached it, went back through it. So now, as we've trended down here on the 4 hour time frame, we've broken over the 20 period, then we've gone down again. Big candle to the downside here into the close on the 22nd. Recovered this morning. So what we really need to do is a 4 hour trade. That's sort of triggering long now on the close of this candle in 20 minutes. Obviously, we can't. If you're trading this as a 4 hour trader, you can't take that till it's closed, really. So hang on for another 20 minutes and see if it's confirmed, because it isn't over yet. But what you'd like to see for this candle or the next subsequent candle is a close above 1735 and then 1750. It's only 15 pips, but it's a key psychological level. And then top of the Bollinger Band sits there at 1754, and then the 200 period moving average sits up there at 1790. That's obviously just 10 pips short of the psychological 118, which we said earlier. I don't know if you're here, Genji, but the higher time frame for you, the 1 hour time frame, is absolutely key. That 1800, if we zoom, 118, I should say, takes us back to there where the 20-day moving average is, so 118. So there are your 3 levels you want to be watching to the upside as a 4 hour trader. Obviously, the downside is at the bottom of the big candle we had into close yesterday, which took us to that 1685 low. Okay, so all the best. Greetings from EJ. Hello, EJ. Hope you're well. What can we do for you today? Let me know. You're a bit of a gold trader, I think, if I remember correctly. Talking about gold. Somebody asked about. Did I do the Swiss? I did do this. Did I do the Swiss ones? I did, didn't I? Yes, I did. Did I? Yes, I did. Going mad. Interesting. This morning, when I was talking to the guys in the office, we've the best performing currency for the last 3 days, ironically, has been the CAD yen. 2 days up, 1 day down, so it's been really quite volatile. So the CAD's got a big lift earlier in the week because of the reappointment of Justin Trudeau as Prime Minister. Japan had this safe haven bid earlier in the week. That disappeared very quickly, so CAD got the lift. We got a further lift today, that's moved up higher. And then obviously politics is swirling around all over the place this month. We will have a new Prime Minister in Japan before the end of the month. More importantly, excuse me, on Sunday, the Germans go to the polls to elect a new Chancellor, Angela Merkel, stepping down after 16 years. Big change for the Germans and obviously for Europe as well from Monday morning. So see how the euro reacts to that, and the DAX and other elements of the German economy as well. EJ, it's Nasdaq. That's what I knew. There was something particular. It was a Nasdaq. It wasn't gold. Nasdaq. Let's have a look. So Nasdaq. Interestingly, the equity markets following. Let's take you up to the daily time frame. The equity markets following a huge hiatus on Monday. This big sell-off. You can see here, Nasdaq isn't actually. It's letting me down. It's not doing what I was going to. I was hoping it was going to show me. But certainly the S&P 500 and the Dow have done the same. It might have cooled off, but you can see the big sell-off, which started on Friday and followed through on Monday here. Let's zoom this up. On Monday, we've obviously gone down here. Actually, let me just insert some other key trending indicators. So the moving average, put the 50 on. Put the 50 period moving average. See, we breached that. This is the blue line here, the 50-day moving average key indicator. We'll come back to this in a minute. But we also, if I put the 100-day moving average, we tested that as well. So a big, significant break of the 50-day moving average. More people might have added to their shorts down here on the close on Monday. If they did, that's okay. That's how they're trading it. Actually, let's change the color of that because it's the color's the same as make it a bit golden color. Color's a bit strange, right? So it's not the same as the 9 period. Make it a goldy color. There we are, that golden color there. So if you've gone short here on Monday, it's retraced. Not on Tuesday, as many was anticipating. That's another negative candle on Monday. Big strong candle yesterday, but as you can see, it closed under the 50, right at the 50-day moving average. It didn't break over, it didn't close over it. We're over it today at the moment, and at one point intraday, we'd recouped all of the big Monday sell-off. However, what you would be looking at, again, some simple Fibonacci retracements from this all-time. Why isn't that working? This is the Nasdaq. Is what you're looking at really is that key 61.8 golden ratio to get this back positive. You'd want to see the Nasdaq closing, or certainly I would want to see the Nasdaq closing over 15,365, where that 61.8 key technical level sits there. So it's coming to, what's that coming at? 15,359.5, so 359.60, sake of a few pip and a half. And back over that key 50-day moving average as well here, the brown line here. So, is this just a retrace of this move lower, which was continued or initiated on the break of the 20-day moving average here back at the early part of September? So the Nasdaq, 2 good days so far, up today. I'm sure you're not trading on an end-of-day basis. But let me zoom that in. So on the 1 hour basis, Nasdaq has rallied yesterday, as we saw on that daily time frame. We're up again today. We've ran so far to the 200-hour moving average and then turned down from it. We've put in a fractal high here at 15,300, turned lower, and we currently trade at 15,250. And look where we are at that 50% Fibonacci level of the big sell-off. Let's go back to the daily. We're at the 50% level of this. This is the big move down. If that indeed is the low, so it's perhaps a bit too early to actually be doing this, but we're into the third day up from this low here at 14,800. So that's sort of relatively feasible. So again, today, if it breaches as a key resistance level we ran into on the 1 hour time frame, which is at the 200 period, and just below that is that 50%. So we ran through those two areas first. Obviously, next is that 15,560 level we talked about, the key daily resistance, the 61.8. Doesn't look too far away today, does it? So this is a resistance. And if we have a good day, maybe we're up to the upside. But we've ran to current daily resistance there. And now next support to the downside now, which is held all day yesterday and all of today, is the 20-hour moving average, which sits at 15,200. So that's your support, EJ. Your resistance is the 200-hour at 15,285. And above that, it's top of the Bollinger Band at 15,315. And then the key 61.8 at 15,316. So that's Nasdaq today. Again, up to the upside. Interestingly, markets, though, the futures markets, obviously the cash markets are still 40 minutes from opening, seem to have sort of shrugged off the hiatus that was caused on Monday from the Evergrande story. So they seem to be taking it in their stride. But markets do what markets do. There's no logic, and just because there's negative news doesn't necessarily mean things are going to go down. Just because we had a hawkish tilt from the Bank of England and the bank and the FOMC yesterday doesn't necessarily mean the dollar and the sterling's going to be bid. Dollar wasn't bid initially, now it's been weaker today. At the moment, sterling's on the rise from that Bank of England announcement today. So I've talked right through the key data I want to look at today, which is the one that's kept me interested throughout all the pandemic, which is basically the weekly claims number. So let's have a look what the weekly claims numbers. So it's 20 minutes old now, so it could be why the euro moved like it did. So weekly claims worse again. So last week they were worse. They've slipped again this week. They're 351,000 from 320,000 expected. And again, unfortunately, the continuing claims have tweaked up again as well. So the weekly 4 weekly average is still declining. We're still at 335,000. That's a good number, but the continuing claims have gone back up again, unfortunately. So last week was a bit of a blip by the looks of things. We're at 2.85 million or 2.845 million from 2.65 million last week. Sorry, that was expected. We were at 271 million last week. So that's a wee bit disappointing. So this continuing issue about the some days are good, some data is good, some data is bad on the jobs front continues to swing, oscillating from good news to bad news, and that's another relatively negative week. The other key data that came out at the bottom of the hour 20 minutes ago now is the retail sales. Canadian retail sales, the core number is down a whole 1%. That's a big negative hit for the CAD. So we'll have a look at the CAD. CAD's been doing quite well recently with the rise in the oil price, but that will have hit the Canadian dollar. And the headline figure is coming at minus 0.6 of 1%. Last time it was 4.2%. Expectation for that to rise to 4.4%. It's a big miss for Canadian retail sales. That's a big negative number for the newly appointed Prime Minister, or into his third term, Mr. Trudeau. So let's have a look at the CAD. Dollar CAD. Let's have a look on an intraday, but yeah, we're down quite significant. That's a daily one, down today. So actually, that news hasn't impacted the CAD, the Canadian dollar at all. We're trending lower. So the weaker dollar continues to add to the bid on the Canadian dollar. That retail data, might add to the pressure on the Bank of Canada to take some action, given what I just said about all the other the impact on the euro as well, the ECB, even though they haven't said anything today. Remember, the Bank of Canada moved to trim their QE earlier in the year, or were about to do it again, then had pulled out as the pandemic escalated. Dollar CAD continues to move. So under 127 here, the 4-hour chart, right, big old strong candle there. So 127's been breached. We're at 126.54. So next support for CAD against the dollar takes us back to last week and Friday's low around 126.38. So we're not too shy of that, 126.55. So dollar continued to weaken. That CAD's held on, even though that data was very weak. That's it's one of those things. Looks like it would have hit the CAD. It has not hit the CAD at all. So there we go. Such is life. Trade what you see, know what you think. What about euro yen 4-hour and dollar CAD 4-hour? Well, we've got the $4 CAD here. That week data was weak. There's today down significantly from 127 attempts at 128 earlier this morning in the Asian session. 150 pips at the moment to the downside. 4-hour candle. Earlier in the week, we were as high as the news was breaking on the election at 128.95 and then moved lower. So the 4-hour trader went short here. Whenever that was a big down candle supported by the 200 period here, but that was from yesterday, 22nd. It's retraced, but your stop loss would have been up here still. And now we've legged down again now. So we had support at the 200 period. We retraced to the 20 period, but then moved back and burst through the 200 period in the last big down negative candle here this morning, the 8 till 12, and now here the 12 till 4's cooled down. But you'll be looking for 126.38, as I said earlier, certainly on a 4-hour to the downside. And then below that, if that goes, looking to, that was last week, earlier in the week, so that's the next low there, 125.86. So 125.86 are below 126, and just before that, you would say your next level is there. So 126 itself. So 126.40 next target, then 126, and then 125.86 to the downside. Dollar CAD on a 4-hour time frame. If this retraces, it needs to get back over 127, and then the 200 period, which sits at 127.20, the resistance is to the upside. NC, my friend. And what was the other one? Euro yen on the 4-hour. Euro yen on the 4 hour. So the daily has been in a big downtrend, and that's probably still the case. We've turned around very significantly today. We found a floor on the daily time frame here yesterday at 128, and here we are at 129 now. So a big 100 pip turnaround, and that's the daily. That's a key resistance. I'll just put that on. We'll come to the 4 hour in a minute. That's a key resistance area there. The 200-day moving average there sits just over 129. So that's a key support at 128, key resistance at 129, and we're just over that at the moment. The 4 hour will look quite bullish. Would have turned around quicker than the daily. Yep, that's turned around. Although it's been triggering or moving lower, the highs continue to get lower, the lows continue to get lower. Found this floor at 128. First break of the 20 period was sold off, and then we're back through it, and then it's broken through that resistance here there in the last candle. So this morning we broke over the 128.60 level, which was your resistance as it's gone up, retraced back to 160, 128.60, through 128.60, now through the daily resistance at 129. So it needs to hold this, okay? So 4 hour euro yen, next upside target, if we hold 129, should take you, or technically the next resistance is there, where the 200 period 4 hour resistance is at 129.50, which is also the cluster and the top of these candles here as well. So if 129 holds, then it's another 50 pips to 129.50. I'd say Yensi, my friend. If not, we retrace back into this 128.60 area, and then further support to the downside would be at 128 itself. So there we go. Let's all get started with my friends over on Facebook. Doesn't look like it. I'm not sure that's. Yeah, no, it doesn't look like it. Nobody on Facebook. That's interesting. Anybody else? Where are we? I missed anything. I just double check. Swissy we did. Pound, yen we did. Say legions and legions of data. Nobody else in here. No. So let's have lots going on today. Lots in the melting pot. Evergrande story seems to be the story of Monday is no longer a real story by Wednesday, but don't discount it's got a long way to run. Let me just leave you with my thoughts here on the most important stock market of them all, the S&P 500. Be a lot weaker than the Nasdaq, and we've been under its 20-day moving average here since the 10th of September. Again, big sell-off on Monday and Friday, as we saw. And our support now comes here at the 4,300 level, which is where we spiked to on Monday's low. But as you can see here, as we've been grinding up, zoom this in. These are daily time frames as well. As we've been grinding up these lows under the 20 period into the 50 period have been bought. Let me just insert the 50 period moving average as well on this one, like we did on the Nasdaq. Okay. So you can see, although it's been bought. But this is during the summers. Summers notoriously, it's low volumes, but we ground higher. September, on the other hand, is notoriously weak, especially this second half, and that's sort of what's playing out currently. Big shock to the catalyst. May or may not have been the Evergrande story. It might be the excuse people want to move it lower to test the strength of the market. We've currently bounced back. Earlier today, we'd taken out the big down candle for Monday, so we recouped all of Monday's loss. But remember, we're still well under the 20-day moving average, which sits up here at 4,470 now. And the 50-period moving average, it sits there at 4,435. So just like we did with the Nasdaq, we need to get back over the 450, because if we do the same thing with here, with the S&P, and obviously the charts look very similar, the numbers are different, that's all. The key 61 Fibonacci level sits there at that 4,450 level. So that's really a lot of, and I'm sure a lot of positions, a lot of institutions will be looking at that 4,450 level on the Nasdaq to the upside. We've got to get through next week, which takes us through to the end of September. Thursday is the 30th, and then we move into October. October heralds obviously the start of the fourth quarter, the final quarter of the year. And 2 weeks after that, the earnings season kicks off in earnest. Excuse the pun. But again, third quarter earnings expect to be weaker than the stellar and knock out the park Q2 and Q1 earnings. But are they going to be as weak as people expect, or are they going to be even weaker than expected? So far, early numbers have been quite positive. Adobe earlier in the week increased revenue by 22%. FedEx beat revenue expectations. They posted 22 million. And BlackBerry, anybody remember BlackBerry? They posted really good earnings yesterday as well. So still lots of potential in the stock market and lots of stock picking of particular stocks. Obviously, the tech stocks are the things that have driven the market higher and supported the market. But again, there's lots of spinning stories around the big tech companies. Facebook come under a lot of pressure this week. But yesterday's rebound here, you can see here on the S&P, big white candle, the biggest of them all. Apple was up 1.68% bounce yesterday for Apple. Yeah, see where we go. So some key lines in the sand for that. So any more requests for anything? Where have I got time? So it's 5 and 40 minutes. Let's have a look. What else is going on? Not as if there's enough. There isn't enough. Anyway, so CAD. I'm just looking at the relative strength of the major currencies. CAD yen remains, as we posted this morning, we were up 1% earlier. CAD yen, and remains the strongest currency, the CAD, and the yen remains the weakest. So that pair is the biggest mover today, up 1%, over 1%. CAD yen's our biggest mover today. I've lost my news feed. Where's my news feed gone? On my calendar, here we are. What else to come? Literally, we've had the South African Reserve Bank announce a rate decision, and there's no change there. It remains at 3.5%. It'd been a major surprise if they'd changed anything. Where's it gone? Why did it do that? I've lost my. I lost my South African data there for some reason. I don't know why. Just default for some reason. Why did it do that? It's all right. I'll just reload it. Yeah, maybe that was why. Yeah, no change from the South African. That's gone again or something. No change there. Yeah, and some of you would sometimes ask for the rand. The rand's had a big the dollar's had a big bounce back against the South African rand. Where are you? Here. In the last few weeks. So although it moved down aggressively, it's come back quite aggressively as well. So any final requests, ladies and gentlemen? So I'm going to call it a day if there's nobody here. Lots going on. So quick recap what's going on today. Top of the shop, 2 key events. One's happened, one may or has got to happen. We'll see what it comes out at. Bank of England have kept interest rates unchanged, although there's been very much of a hawkish tilt towards from the group. So that's helped sterling here. Sterling over 137 at 137.25 at the moment. And the other big news that's been spinning in the markets has been the property group Evergrande needs to pay its interest on a 2022 March bond repayment of $83.5 million. Doesn't look like all of that's going to get paid, but some local bondholders are going to get paid. And a news breaking out of the Wall Street Journal was that China's looking to preparing for the potential demise of the company, the second biggest property developer in the country. So, and local councils have been put on notice about that. So, see where that all ends up. Lots of other banks moving. Notably, the Norwegian Central Bank increased rates The central bank in Turkey has slashed rates. South African central bank kept everything the same. There we go. PMIs very weak out of Europe and the UK. Not so weak out of the UK, but certainly very weak out of Europe. Still to come, we've had we've had Canadian retail sales which were weak, but the Canadian dollar remains the strongest of the day. We've got US PMIs later on, and that's really enough to get anybody interested in the market. So PMIs in about 40 minutes out of the US. And we'll see it all from there. So we'll see you all again tomorrow. Andrew will be back on tomorrow for a wrap for the week. Very, very key week. The Fed, it's not surprised, dovish tapering news, I suppose, is how you might describe it. But certainly, it's going to happen by the looks of things, certainly before the end of the year. So take care, everyone. Stay safe, and we'll see you all again tomorrow. And any final requests? Nobody saying anything? No. So let's call it a day. Take care, everyone, and see you soon. All the best. Bye-bye.